What's up everybody, Tom here with another video. Well guys, it's been a monumental 24 hours. We've just seen cryptocurrencies hit all-time highs. Bitcoin's not only got past 20,000, but as we suspected, smashed that level. In this video, we'll be talking about our technical analysis for the S&P 500, Nasdaq, Bitcoin, Ethereum, dollar index, gold, and more. And we'll also be talking about what we think is next going to happen for all of these pairs. Stay tuned. Alright, so as we like to do together, let's get started by having a look at a heat map of yesterday over the last 24 hours on the stock market. And this pretty much is showing us a movement into the FANG stocks has been occurring again. Microsoft and Amazon were up. Now, it may look like Apple was only down 0.06, but it had a massive day before that, 5% up the day before. So there's been a pretty big move into technology, and the Nasdaq has been the main stock index that we suspected would be probably the best one this week in our weekly analysis videos. What else has been happening? Well, it's really just been mostly tech. We did see a bit of selling pressure come into the markets near the close there yesterday, where basically it was all green, all good most of the day. Big run up here with the FOMC statement, and then of course a slight decline. Nothing too much to note about the things that are going on there. If we take a look at all the sectors, I think again, nothing too much to note. Most sectors were within a few, not even a percent each side. So I would just say that at the moment, technology seems to be the strongest in the markets. But it's what happened in the other markets as well that's very, very interesting. And that was that Bitcoin not only surpassed $20,000, but it is now above $21,000. So when Bitcoin moves, as we know, the nature of this instrument is that it will go hard and it will go much higher than you usually expect, not necessarily dealing with the key psychological first resistance. It often goes to the second one or the third one. We'll be talking about that when we get to our technical analysis a little later in the video. Also, the Federal Reserve, the FOMC statement, the last one for the year, guys, is now in the book. And they basically just said they're going to keep buying bonds until there is a substantial progress in inflation, labor market goals. So we scroll down here a little bit, and I think this is the main wording that's important here. So previously, the Fed had only said that the purchases would continue in coming months. That was to try to see what would happen, obviously, if they did take away some of these programs, but we always knew that they would come straight back in. And that's why the market hasn't moved too much off this announcement. There's no new interesting kind of programs, no new interesting stuff that I've seen so far, and the market's not really reacting too heavily to that. It's just more of the same, but they're prepared to, of course, extend it if necessary. Let's get into the technical analysis now, and we'll start just quickly with these put-call ratios. Put-call ratios were dropping a little bit here. You'll see the post-market was a 0.785. That's good news because remember, we use it as a contrarian indicator. The lower the amount of puts in the market, especially after expiration, which is happening this week, then the better that is, or the more likely that is that we could see a decline in the market or a partial correction. And at current level, especially for the S&P 500, that is what we're kind of looking at around this 3,700 level. Now, VIX, Volatility Index, that did spike out earlier this week, but basically it's now testing this 22.7 area from the top down. We saw that that was resistance. We knew that that was a good little level. Let's put a horizontal line there now together. And when we do that, you'll notice that this level now is finding support. So for VIX traders, for people that are looking for spikes in volatility, we want it to hold above this zone and again go back to 24, 25 zone and break high. So what I'm looking for now to really show some kind of volatility coming back into the market is a break above this area up here, above the 25. It might be worth boxing that up, setting an alert, and if it does occur, that should be followed up this time by further selling pressure. Because we're well off the 20, we'd be above 25, and we know that the VIX has a tendency to do some big spikes, and with that, huge volatility comes into the market. Dollar index has probably been the story, though, of the week. And just like it was last week, the dollar continues to slide. That is the US dollar. Let's have a quick look here at the weekly, just to show everybody how far down the dollar can certainly get now that it broke through 92 and obviously is on its way all the way now potentially to this 88.9. We've seen a very strong close below on the daily here, below that previous resistance, which was acting as support at 90.50. And we've taken that extrapolation out, and you'll notice that that at least takes us to 89.90 area. If not, we go all the way down over the next coming weeks and months down to the 88.9. So we're pretty bearish on the US dollar right now. All the technical analysis is showing that kind of thing. And the 20 moving average on the daily is also meeting up with it. Just remember, guys, we had the 1 touch, the 2 touch. So if we do get a 3rd touch, let's say here or wherever we're going to get it, it's most likely going to act as some kind of dynamic resistance and give us as traders and investors potentially opportunities to then go in, dial into the smaller time frames and find reasons to be in it. So with a weak dollar, that's led to cryptocurrencies, gold, silver, all of these types of pairs to actually booming, and they're doing really, really well. So let's talk about Bitcoin first. I'm sure a lot of you and the channel are very excited about this move. So at this time, it's even higher than it was when I first started recording. I started recording about 21,100. We're now looking at 21,000, almost 500. So I would expect this to go towards $500 and $1,000 prices. We may now see a 22,000. I would be very surprised not to reach around that level now. And I think that when we dial into the smaller time frames, things are going to make more sense. But look, this has been a great technical analysis story. We had that big break close above this 18.6. We knew that that would then target the 19.4. It found resistance. Then we knew it would target the 19.6 and hover around just below that zone. And then, of course, it coiled up and boom, it just went straight out. Now what you're doing is you're really trying to find a reoccurring moving average that's finding support. So here on the 2 hour, you can see the 20 was holding it at this point. Now it's so far away from moving averages because the hype train is on that it will want to pull back at some point. Will it be the 2 hour 20 moving average? It comes down, the 20 moving average obviously meets up with it, and then maybe find some dynamic support, allowing day traders and scalpers to get back into the market. But for all those investors that missed this point, I wouldn't be worried too much. I think at some point Bitcoin will basically decline back down to this 19.6, 20,000 zone. And then what was once resistance will of course become support and will become a pretty decent buy area as well. And we'll continue to watch this on the channel. So make sure you subscribe and of course hit that alert buttons if that's something that interests you. The other cryptocurrency I'm very interested in is Ethereum. We talked about that earlier this week. We talked about this great role reversal zone. Look at these buy wicks here. I'm going to zoom that in. Beautiful buy wicks, beautiful resistance. The resistance was broken. Obviously a huge slingshot effect into the 620, which is an area we've been watching. We're now above the 620. We're trading at 635. And what do we have over here? We've got the 1, the 2, and the 3. So we've got that basically key resistance zone that's happened before. What does that mean for traders? Well, let's say it goes to 650. Then it eventually, hopefully, will pull back. If it pulls back to the 620, do we expect that zone to potentially be a bought up area? I think it would make some sense. We could have the 20 moving average of a significant time frame meeting us there, or 50. And of course, we're looking for a lightning bolt style move and then the move to the next zone. And where's the next zone for Ethereum? Well, it's always been every $100 and every $50, but take a look at these $800. $800 the first time, $800 the second time. And this can happen historically, even when Bitcoin starts to kind of slow down. So when Bitcoin slows down, let's say it hits like 22,000 or something, or 23,000 or whatever it might hit, when it slows down, often money flows into the altcoins. We've seen XRP, we've seen Ethereum, we've seen Litecoin, all moving up. But at the same time, they often lag Bitcoin until the hype dies from that one. And then we go into the alternative coins and we see those big moves. If you go and plot what happened with Ethereum, Ethereum was running very hard last time into January, whereas Bitcoin was kind of slowly slowing down around that December period. So remember, the altcoins tend to follow after the big coin has moved. If we take a look at gold as well, great little structure progress here. We've got this 1850 that we've always been paying a lot of attention to because of the previous supports when it broke through. We have resistance, a close above, a retest of the zone with a moving average. You can see how that was bought up there by traders and investors. And now gold continues hopefully towards its 1875 resistance. And then after that, we're looking at just under 1900. Look at these levels. If we put a horizontal line on 1900, it becomes very clear that that's going to be the next zone. And of course, we already know that this was the previous resistance. So gold traders should be pretty happy with the bullish movements going on. And it just shows time and time again, correct analysis is great. We had that 1825 support and it was a head and shoulders. No doubt it had a left shoulder, it had a head, and it had a right shoulder. You were correctly analyzing that as a community, there's no doubt. But the close is the key. We need a close confirmation underneath that shows the momentum and the psychology of the market is towards the bearish side. And because we didn't get that, look what happened. It went up, it broke past and closed, and then of course it got through the right shoulder, and that was all she wrote. It goes higher, and of course now the bulls are fully in control right now of gold. Silver is the same thing. Silver tries to get towards 26. We're pretty happy with this. We are, of course, medium to long-term bulls on silver right now. And if we can get above the 26 zone, that's going to be the significant area, I think, which will really start some interest back into silver. Remember, earlier this year, everyone was hyped on silver. And then now people have kind of been slowly, getting back into it, but not that excited about it. If we take a look at the zone or the range that we've had basically a range between 22 and 26. That's a $4 range. What is that saying? Well, if we get above 26, $30, go test the new highs. Massive amounts of resistance and support through this zone. And we would expect, of course, this to act as some little bit of resistance. And then if it gets through, conservatively comes down and tests it, and then of course 28 and 30 are going to be the key zones for silver. Silver's the easiest one because it's always every dollar and every 50 cent that seems to act as a key resistance or a key support. So really nice setups here, and again, exciting to see commodities such as gold and silver coming back into some type of interest levels as well. All right, well, let's start our analysis of the major indices by talking about the Nasdaq together. So the Nasdaq has continued its run up. It's been very strong. It's trading right now just under 12,700 in the futures. We've got it on the weekly here, and I wanted to bring this up because we have basically a giant channel that was broken out of. And we did make mention of this some weeks ago. Let me just grab that again, put down a line, which is of course the line that we expect it to go towards, and then extrapolate that out. And that's really pushing for a pretty high level. We're talking about 13,250 if this was to complete. So that's the weekly approach right now to, of course, the US 100. But the other thing I wanted to mention was just what we saw earlier on in the week. We had our 20 moving average being touched once, being touched twice, being touched, of course, 3 times, and finding support. That's something we really like. It's around the right zone as well. And again, notice the double hammer rejection. When we got that new high, it didn't have to be a close, just a new high above. That was really the significant thing we were looking for this week to lead the way. And I guess we were pretty correct as a community that it was going to be mostly about the Nasdaq this week. We've gone back into resistance now, made a new all-time high, but realistically, this can all come off very, very quickly. This was just a trade where if you go down into the smaller time frame, say like a 4-hour, you'll notice it's basically a little double bottom here, bit of consolidation, really nice trade off the 20 moving average here, and it's basically completed. If you take the distance and you extrapolate that out, where is that going to go to? Well, it was already completed. So it's going a little bit higher, and this is the time now with a new high that I think the Nasdaq could have some troubles. Could it shoot off in the Christmas rush? Absolutely. But I do think that there's always a risk reward parameter. And if you're day trading, this is the fine trade. But if you're investing, does it make sense right now to say, oh, I think the Nasdaq's the best value out there? It's going to be tough. It's going to be tough. But the trend is still up, and you do not want to fight the trend. So we don't have a new low. We don't have anything like that. I would still have this set as an alert, something like 12,250. If the market over the next coming weeks was able to get underneath and close below, this is the significant thing that changes the trend, because basically we'll have equal kind of peaks and we'll have a new low forming underneath the trough. And that, of course, means a double top. But right now, that's a long way away. So it's just really wait and see. If you're in long, you have no signs to say that things are weakening other than the fact that it is getting high on fundamental scales. So Nasdaq was a good little trade within a trade there. If we have a look at the SPX 500 or the SPX, basically we have here a very solid level. We talked about this little ascending triangle for some time. It's gone back and it's tested the highs. And it's a very similar scenario to the Nasdaq. Basically, we don't have any signs that it's weakening at this stage. We do have equal kind of peaks. We do have a little bit of a rejection coming into the close there. And we have a very important trough over here. So if we were to draw any line right now, I think it would be worthwhile drawing a line through this zone, 3640 area, and setting an alert for it. Because again, if it broke and came down, so it came down, closed through, we're most likely at that point getting through a 50 moving average on a 4-hour and showing signs of weakness. So this is the key pattern that I'm looking at. And if we break to a new high, really all I'm going to do is probably just take this distance here and then extrapolate that out. And that really is pointing towards a 3,800 kind of resistance at the end of the day. It's going to go probably around that kind of movement. And a few people have been calling that on the channel as well. Apple, worthwhile taking a look at this just because it was a really nice little trade. It got through that 125. Now we expect it, of course, to weaken back into the 125 and the previous resistance levels here and here to act as, of course, support in role reversal. And that possibly could lead to Apple going back up to 132, 136. So interesting times for Apple, and certainly nice little technical analysis through every $5 increment right here, right now. So we hope you enjoyed this video. If you did, please remember to give us, of course, a thumbs up and subscribe and hit those alert buttons. We appreciate everybody in the trading and investing community and, of course, your support of this channel. Remember, make as much money as humanly possible, but only if it is safe to do so. We'll see you in another daily update, probably tomorrow. Bye for now, guys.